So good morning, active traders, and welcome to our Trading Week Ahead broadcast coming at you here live on Saturday, April 17th, 2021. S&P is currently right under resistance at 4,200. I would keep things simple this next week ahead. We've got a lot of earnings up to bat. Last week was banking and a little bit here and there. Goldman Sachs, Goldie reported, but the bulk of the earnings releases are coming out next week. What that means to you as a trader is we have day-to-day gap and volatility patterns to look at. It's been straight up the last few weeks, right? The market has been outstanding, but earnings may put a roadblock in the way if we get misses. We fail to beat on some of the key large caps, especially in earnings. So what that means to you as a trader is, that's what I'm doing, is going mostly cash into the end of each day, because I don't want to put on large swing trade sides and then have the market gap against it. So it's been a great run, but I've been tightening up trailing stops on my open swing trade positions, doing a little more day trading because the volatility is there. And whenever you've got earnings season, that means you've got gaps, not only in the stocks that are reporting, but others within the same sector, or the same industry group. So for example, if United Health reports great, you may see sympathy plays in other healthcare sector instruments, whether it's biotechs or others in that industry group. So look for similar stocks that are gapping day over day next week, and play it light, play it safe, because all it takes is a couple of, the market is priced in perfection here. Anything less than perfection, are you going to see a pretty major drop. So be careful next week. Let's take a look at the S&P. Let's keep it simple. Let's use 4,100 key support, 4,200 resistance. I expect we will get a small gap and a continuation maybe Monday. It's anybody's call as to what happens in next week's price action. If you take a look at our other charts, let's go through these. The VIX under 20 has been a result of the bullish market. The other Wall Street traders, we all use the VIX at 20, right? So the key support, previous support, is now new resistance. What my colleague Steve Niss would call a change in polarity. Previous support had been 20. Now, because we're under 20, that's going to be new resistance. So keep an eye on the market. Definitely, I'm not going to be much long stocks if the VIX gets back over 20, and I'll be looking for inverse plays or short plays. If the VIX continues to grind on down under 20, then full steam ahead, and we press the pedal to the metal with our winning breakouts as usual. Speaking of which, I've been giving you guys Philip Morris, now known as Altria, for the last month here in the Trading Week Ahead broadcast. And congratulations if you swing traded. It ran all the way from the mid 40s up to just over that 50 key resistance area. Now we're right under 53. So I'm going to buy Altria if it gets over 53 next week. I like 53.40. In our healthcare sector, United Health has been quite the momentum runner, going from 320 up to just under 400 up here near 393 or so, right? 391 was the close. Technical resistance is 400. Now this illustrates a concept, and even if you don't trade this instrument, learn from the concept is that you don't buy nines. So this would be a good place to tighten up a trailing stop to book a profit if you're in it, but you don't buy right under a key like a 400 would be major resistance. So no, not a trading recommendation. I'm going to buy UNH if it gets over 402. Not likely to occur in the next couple of days, but if it breaks 400 by a couple of dollars, then I'll get in. But right now it's kind of like a piece of fresh fruit that's kind of ripe. It's ripe now. Good to take profits in it, but it may pull back down if it fails to break the 400. Another favorite chart that I've been in long recently is Yum, right? Yum Brands, Taco Bell, and many other fast food restaurants, the parent organization. With the reopening and infrastructure growth and all that, that means America's hungry, so they're eating, and they're eating out more. So with that, Yum has been a spectacular runner. I called it long for you guys earlier here a couple weeks back, and congratulations if you took that. Again, same thinking with this. We're at the 9, at the 119 resistance. So this is not a place to buy it right under 120. Personally, I'll get in this guy if he breaks the 121. Expect a false breakout right at 120, right? So newbie traders might buy long right here because, hey, it's going up, and then get stopped out. We always want to avoid false breakouts. So always set a safety buffer or margin above the high. Hey, before we keep going, let me ask a quick question. I've been cycling through some swing trading charts. How many of you are day traders? How many of you are swing traders? Or how many of you do a little bit of both because you want to show me the money? Type in the word day, swing, or both if you would in the chat box, and I'll update our chart coverage right now based on the majority of alerts. Wow, a lot of folks. Hey, thanks, Tom, Fernando, Sherry, Kurt, Mega, Frenchie, Mike, Don, Tom, Glenn, Michael, Rob. Let's see, we're getting both, swing, day. Looks like a lot of you do both. Okay, that's been the case the last couple of years. So one thing you want to think about is a hybrid, a combination approach to day and swing trading. That's what I do. If I'm in a position that I like, and I think it's going to keep going up because it does keep going up, then I will day trade it on especially strong days, but swing trade it with leaving some shares on the table, you know, on a continuous move up for swing trades. So the best kind of charts to trade, therefore, are often charts that are good for both day and swing trading, because so many of us do both, right? That's how I trade. If I'm in a position, say 200, let's say I day trade something and I do maybe 200, 100 or 200 share for a day trade, a small day trade position up and down, I may leave, you know, 40 or 50 shares on the table for a swing trade if I'm initiating a new position, and then scale in on subsequent days. So you've kind of in your hip pocket, you've always got some shares in an uptrending instrument that you keep in your accounts, that you don't sell too soon. How many of you sell too soon? I do it all the time still, but less than I used to. But if you sell too quickly, it's frustrating. Like if you bought it, say the 107 breakout and you sold 110 because it was pulling back, and then the next thing you know, it's up at 120 and you miss out on the run. How many of you have been in that situation where you're really correct? You thought it was going to go up, and sure enough, it did, but not before you got shaken out, right? It happens all the time. The solution to that, the tip, and it's one of many tips that I cover in my live room, Trading Open, is we like to do a hybrid approach where you can day trade to your heart's content for a nice breakout, but as long as it stays above a 2-day high, the previous day's high, as long as if yesterday's range is here and we're day trading it here, as long as we leave some shares on the table, as long as we don't get under the previous day's low, because it may well keep running up, as so many of our picks have done. So I teach how to do those kind of strategies and more in our live room. You might want to take a look at it at trademastery.com/live. Anyway, back to our regularly scheduled program. So if you are doing both day and swing trading, think about keeping, I usually keep no more than 20 or 30% of shares alive for a swing trade, and then I day trade on top of it, kind of thing. So that way you do both. You get the best of both worlds because you're feeding and keeping alive a winning swing trade in the background while you're day trading in and out of the price action breakouts and gaps in the current day. So another smart professional trading approach. And by the way, that's one thing that sets my room apart from others, is I like to cover charts that have relatively good consistent swing trade breakouts, as well as intraday, the hot stock of the day for a day trading. We're gonna look at day trading charts here momentarily, but you wanna cover the best of both worlds. You do not want to day trade low float, under $10 crappy, you know, $3 stocks that some Yahoo in a chat room is front running his members on and that kind of thing. You don't wanna do that. Don't go out like that. I inherit so many traders from these other pump and dump, plop and drop chat room operators who claim to be making up to $100,000 a day trading $2 stocks and that kind of thing. You want to avoid that like the plague. You want to trade charts that are consistent, that are intelligent, and are not random gappers of the day that are $3 stocks. Much better to trade $15, $20, $30 stocks like Allie. Anyone else trading coin? I am. I was trading coin yesterday and the day before. We'll talk about the coin intraday chart in just a minute. But first, with our infrastructure being built up significantly, I really like the Home Builders ETF, XHB. I don't know if anyone else trading XHB. This is a good example of a very intelligent swing trading chart. Here's the 3-month. If we take a step back, to 6 months, you can see even more impressive. Now, it didn't double or anything, but it's been a consistent runner, and that's good. That's good for both long-term position as well as long-term swings. Short-term swings are looking for bigger ranges within a week or two, right? But long-term swings, you want charts like this that are slowly grinding up. And so for those of you who are active investors or position or long-term swing traders, be in the right neighborhood, whether it's Bitcoin or fuel cell technology or electric vehicles like Tesla or XHB. Our home builders ETF has been doing really good as the flight out of the big cities into the suburbs has created a boom demand. And of course, our lumber is also up nicely, as is steel. Here's the one, I just wanted to put that in context for you. The 1 year of XHB, it's doubled and then some, right? From 30 to 74 a share. So this is the home builders ETF, and this is an example of a spectacularly strong chart that really makes sense to buy at new highs. All right, let's take a look at some other charts. We got just a few left in the swing, this iconic swing era. Now, copper had been strong until this last 8 weeks or so. Freeport had ran all the way up to just under the 40. Again, notice please what I taught you with the earlier charts. You sell the nines. Notice please resistance in Freeport, FCX, the ticker. One of my favorites, it's a copper play. It's my favorite way to play copper. I like that. I've traded this. 39 or so is resistance. You want it to break that multiple of 10, the 40 value. You may have seen my articles in Stocks and Commodities magazine on that very topic. So I'm going to get back into Freeport if it gets over 40. Say, not a trade recommendation, but I'll buy up at say 40.4 or so if it breaks out to new highs coming up in the next week or so. So that's FCX. The big drop chart in TIRX. How the mighty have fallen. Dum, dum, bum, bum, boom, boom. From 100 down to 15. And schwang, I called it long for my members yesterday for the first time. Nailed it, baby. And look at the break. From 10 to 15. That's called a bullish engulfing. And again, for candlestick pattern training, learn from my colleague Steve Nissen at candlecharts.com. And only Steve Nissen at candlecharts.com. No other person is qualified to teach candles. Anyway, I learned from Steve and I'm grateful to him because what he teaches works most of the time. So at a bullish engulfing down here, for a swing trade, again, I don't buy right under decade value. So I'm not going to buy at 18 or 19 a share. I'm going to wait till TIRX gets over 20. And not a trade recommendation, but for the how the mighty have fallen, but now trying to bounce, play the day, play the week. The beat down may be good for a bounce. What you want is a big vertical drop. The bigger, the better, and then a little bounce. Now this is still, a dead cat bounce. Bad kitty. It was great for a day trade yesterday. I'm not going to swing trade it though till it breaks 20. An exit target might be in the low 30s, maybe 32, 34 up in this region. So if I buy at just over 20 and sell right over 30 or so, I'm a happy camper. So TIRX on the radar for moving forward. And our last of the swing trading chart coverage is how to just play the broad market instead of playing the spiders or buying calls. Actually now it's not a bad time for weekly options plays. If you look at the put call ratio and look at your Greeks and all that in the SPY, you can see what I mean. And look at the strikes on the weeklies, right? So for those of your options traders, good time to look at calls for S&P, the SPY. But anyway, for those of your fellow equity and ETF traders, the S&P long SPXL looks good. And again, same exact strategy. We're right under the 100. So now would be a really stupid time to buy it. I'm going to wait till it breaks, say, 102. If SPXL breaks 102, look at the leverage. From November, it's doubled from 50 to just under 100 a share. You can see a doji yesterday, so they're a little bit uncertain, right under the 100. This is a good place to tighten up a trailing stop if you're long. Let's make that an audience interaction quiz chart. Where, if you're along SPXL, and some of you might be, I don't know who else is trading SPXL, show of hands are thinking about it. If you were long SPXL, where would you trail a stop? And I'd play the theme song from Jeopardy. Bum 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 dum dum ba dum bum 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 bum. Don't everybody post at once. I will do, Mira. Thanks on PHM. Okay, it's good to know. I'm looking for builders. XHP is the only one I know, so thanks. Traders mentioning the ticker PHM for builders. Let's see, 96, 99, 95, 94, 96, 98. All right, Sharif, to read the tickers, you're right. Don't try and read the ticker in the upper left. That's an eye test. Instead, look at in the quote box, the one that has the white box around it. That's easy to read, or like where my cool looking cursor is. Let's see, less than 96, 96, 75. Yeah, that's exactly right. 96 is the right place to trail a stop on this guy. Your exits are more important than your entries. And that's counterintuitive until you, unless you're a professional trader. Ask any floor trader, any CBOE trader, any market maker, any spec, any prop trader. Exits are a lot more important. Multiples of orders of magnitude more important than entries. Because again, you could have thrown a dart at this guy on the way up. What counts is where you book a profit or take a stop, right? Now, if you're in this long and right, that's great. The price that proves it wrong would be a loss of a 2-day support, particularly because we're right near the 100. So a loss of 96. Watch out below. It'd be a great place to not short it, because this is a very strong up chart, but it would be a good place to tighten up a trailing stop on an open winning long. So good work, folks. Now let's take a look at some day trading charts. I live for this stuff. Now, IPO day was Wednesday. Beatdown day. The day after an IPO is, I'll say almost always guaranteed to be a sell-off day, but frequently you'll find that the day after, and this is a rider downer, for those of you who are intelligent and want to learn how to actually really trade from a guy who's traded many millions of dollars worth of order flow, it's a rider downer. With the Mont Blanc pen, if you got one, write down the idea that the day after an IPO is never a day to buy it. Just like the day, even though I did call the bounce long for a day trade on Thursday correctly, it was 327, I want to say, was a long trigger, and then I got them out at 334. Anyway, but in general, you never want to trade the day after an IPO. Just like it's usually not smart to trade the day after a gap. You want to trade 2 days after. For example, my live room members are thrilled yesterday. I called coin long starting at 327. That was a good breakout. That's, by the way, that's one thing that you can look forward to as a live room member, is unlike 328.7. Okay, that was my long call. 328.7, right up here. And they ran up, 15 points or so. One thing that my live room members really like and have for many, many years is that, unlike other rooms, I'm the only person that I know out there that gives specific entries and real-time exit calls. So instead of just a watch list like every other live room does, which is just like a talking head show for traders, which has some benefit, but the 80%, the big benefit to being in a live room is you need to look at the prowess of the room moderator and able to call out long alerts and where to sell live in real time. And that's what I've done for traders for decades. And not trade recommendations, but educational patterns to look for. Like this was a cut pattern breakout, so I called along at 328.7. So you get specific trigger points in my live room, unlike any other room. That's a big value, right? So if you're not yet a live room member, this is what I call an answer key, and I update this daily, of course, before the market opens, long before 9:30. Anyway, back to our charts. So coin looks good. We'll see if it goes up. I bought a little bit. I think I bought the high of the day. I hate when that happens. I think I got a fill at like 344, but with a $20 trailing stop. So I'm using small share size, but large trailing stops. And so that would not have hit. So I'm still alive in my coin. So we'll see if it gaps up and runs on Monday. A big beatdown chart is EBET, E-B-E-T. It ran as high as 70 pre-market yesterday and then got all the way down to 26. This one would be worth keeping on the radar next week. We'll be covering this one in the live room on Monday, so be sure to join me if you want specific triggers on where and how to go long or short anything that I'm covering, or charts of your choice. That's another thing that I cover. As long as the chart looks good, we got so many great charts for my members that will ask about a chart, and I'll add that to the alerts table for everyone. So. EBON was good for an upside move. And again, this is the bullish engulfing pattern, right? If you mark out the current day, it eclipsed the previous day. So it came from below and then swooped up to a new high, then pulled back off right under 520. So for a Bitcoin play, we used to like Mara and Riot, but now I like EBON because it had sold way down here to $5 a share and is at its first big, strong, institutionally long volume day yesterday. Look at how big the volume is yesterday compared to the day before. This is a 2-day chart. You can see Thursday on the left and Friday on the right. Volume confirmation is one of the signals that we look for in the live room, and I like to teach traders how to identify those in real time using live real examples. And we do cover charts under $10 like this if it's got a strong volume, if the volume is high enough. You should never, ever, ever day trade low float stocks that have less than 15 or 20,000 shares per minute. And the reason is because they're subject to manipulation and front running by unethical people running live rooms, or they try and play this hot potato game with their members, or they'll put on a big trade and then they'll announce it after they put on the trade on some thinly traded instrument. You get hundreds of people that bid it up, and then the room operator sells to them, and they get caught with their buying the high or something, and they lose a fortune. So the protection for that is don't trade low volume instruments. Make sure you're trading something that is safety in numbers, that's widely traded out there and not subject to manipulation artificially by chat room operators. And we never cover low volume instruments in my room. I only specialize if we do trade cheap stocks. They're ones like this, it's trading lots of volume, right? Well over 15,000 shares a minute. So that's really important. If you've ever been screwed in a day trading room, that's why. Avoid low float under $10 stocks. If you do trade under $10 stocks, make them look like EBON, where it's got lots of volume. Here's that TRX chart. Remember, this is that one that had been $100, then dropped, and this is a bullish engulfing to the upside breakout pattern. So TIRX, definitely on the radar. I'm going to trade this one myself if it breaks out above each whole number except 19. So I'll buy it over 18, I'll buy it over 20. So we'll see if TIRX is good for a play. Let's see. Oh, thanks. Okay, let's see. PHM. Trader Invention. This one for home builders. Yeah, that's good. The only thing I don't like is the range. The range isn't great. But yeah, it's a good strong mover. Got a little bullish engulfment kind of thing there. Somewhere north of 55.5. I would expect a false breakout. An instrument's priced in the 40s and 50s. This one though, actually, this one, I'm not going to trade that one though, because if you compare and contrast that chart with this chart, this one is tied tighter. Always look at your charts like, I don't have a piece of rope or string or something, or a piece of yarn, but you want charts that are clean and tight, not ones that loop up and down, because those are tough to navigate choppy waters, right? Because you get stopped out, it's hard to know when to get back in, when to scale in. It's all like, I don't know. So don't trade, I don't know charts. I like charts like this. The cleaner, the more it resembles a tight channel, really tight channel, if that makes sense. And I know you're really smart, Mira, so I wanted to just give back to you with that tip. The one that you mentioned as large up and down moves, the trend is right, so that's good, but it'd be tricky to scale into. It's easier to scale into, and that's a key to trading success. Is always look at your trades as though they're the first in a sequence of 2 or 3 decisions you'll make about where to scale in or scale out, at minimum 2 or 3 decisions. So oftentimes when I'm swing trading, I'll scale in and out of that thing, a dozen, 15 times over the course of 2 or 3 weeks, because it's either taking on new highs and I want to scale in and build it on a breakout, or if it's proving me wrong and starting to lose support, I want to tighten in a trailing stop on the current play to either lock in a profit or minimize the cost of a stop. So anyway, the cleaner and tighter the chart, the more it looks like this rather than up and down, the easier it is to trade. So that's another good tip. Hey, Mike, let's see, options plays on eBet or TVEX. I wouldn't. The only things that I like for options plays are charts like this that are relatively consistent because, you know, you got premium decay working against you. And if you look at your Greeks and your strikes, high volume strikes and unusual option activity is always noteworthy that you do want to pay attention to. But haphazard random, it did something out of the ordinary lately. Charts are not ones that I like to look at for options. For options, you want things that are relatively consistent where you can kind of visually price project a strike that's likely to get hit. You know, otherwise you're just guessing and gambling. So I would not, personally, I would be looking for an options play on eBet. Day trade, sure, but swing trade or options is kind of like a swing trade if you're doing weeklies or monthlies or whatever. No, because the strike is hard to get. It's another quick tip too. Like Philip Morris call options would be great, right? For a weekly in the high 50s. Not a trade recommendation, but a strike at 56, 58 on a weekly and MO Altria would make sense, right? Anyway, nice consistent uptrender and a nice clean chart to boot. What you'll find is that charts are often punctuated by pullbacks or consolidation regions. That's usually a good time to go to cash. Don't just sit in the trade and have it tie up your valuable capital while it's going sideways. Once it's done its thing, that's great, but as one smart lady trader said, it doesn't matter where it came from. What matters is where it's going to on the right side. So booyah. We want to see if this is able to take out new highs. It's been sideways for the last week or so, but I really like Philip Morris or Altria. I followed Mo for decades, so it's hard to get used to the new name. It's probably not new now. It's probably like 8 years older now when they change the name. Anyway, Yum Brands also. People are hungry out there, and fast food giant Yum, parent of Taco Bell and many, many, many others, looks good north of 120. I like the price action, and I like the fact that it's clean pin action, clean tape, a clean price action breakout to the upside. See a question about Moderna. I traded Pfizer earlier, but it just got stuck near the low 30s. Did the run up to 43, then back down to 33, then back up to 38. These drug stocks are inconsistent in their price action. The leverage is good. The range, so the first thing I look at is range. Do we have at least a 2-to-1 ratio on the 3-month or the 6-month? If we kind of zoom in on the 3-month, you can see. I like the swoop up, and it's a good directional play, but where you have overhead resistance right near the 190. The thing that I don't like about it lately here is the leverage is no good. It costs too much. You're paying 170 a share. For me, it's okay, but there's better fish out there to fry. So Moderna, it's not consistent. It's swooping up and down. I prefer charts that are clean, tight, going like this. That's what you trade. You don't trade stuff that's up and down because who knows where it's going to go, right? So just say no. Now, maybe having said that, if I were to play it for a swing trade, not a trade recommendation, I would go long at 177, and I'd use a hard stop at, say, 165. I'd play it tight, go long here, and stop no lower than down here under this candle low, I'd say 155 or so. But I'd play it even tighter, the middle of the candle, 165 or so. So I'd play 177, hard stop 165. I would not play it up here. I'd wait till 202. Again, we don't buy the nines. We sell into the nines. So it's kind of late cycle upside move, but if it does take out new highs, maybe worth a shot. All right, gang, we're about out of time. We do want to keep an eye on a broad market, and we've got really good price action in a number of different charts, and you can see our S&P currently just parked under the 4,200. Now we had a little bit of bank earnings coming out last week with Goldman, Goldie, and a few others out there, but the main earnings week kicking off earnings season is this week ahead. So do be sure to join my live room at tradingtheopen.com, which will forward you over here, trademastery.com live. Do join my live room, and we go over both swing and day trading alerts and specific triggers in each day's session. Echo stop. That means our time is about up, friends. Thanks so much for being here. I appreciate it. And again, the live room, if there's any questions, let's see. Let's see, who am I looking for earnings to trade? Well, there's dozens of companies reporting earnings, but whichever ones have minor gap continuations to the upside. So I don't have any preconceived notions about which earnings plays are worth trading because I don't see the data yet. But if I trade patterns. So if something had been, say, it closed at 30 and it gapped up post earnings to say 31 or 32, it's continuing on up, then we'll post a long alert for our members in the live room. So whatever has small gaps up will be following for earnings plays. And of course, all of our other core stocks we look at as well, like Lately Coin and GameStop and Ebon and T-Rex and Freeport and Philip Morris, Altria rather, and others. So anyway, that'll wrap us up for today. Thank you for being here. I wanted to wish you the best for your week ahead. If at no other time in the first 6 months of the year you join my live room, now would be the right time, because next week we're going to have an especially volatile tradable market to the up or the downside based on earnings releases. And just a reminder, day over day earnings response gap will be long or short. It's not going to be all long day. It's unlikely to be all long days. We may have a blowout earnings day from whoever reports of who's significant on Monday and a gap up on Tuesday. But then after the bell on Tuesday, we may have some earnings misses. The market gives it all back on Wednesday. This is a trader's market. It's they buy support, sell resistance, right? And trading the breakouts or trading within the trading channels correctly requires some street savvy and some smarts. So hopefully I can help you with that. And wanted to ask y'all to join the live room, and I will see y'all next Saturday. So take care. Best wishes for trading success. Play it smart. Let's go get them and make some money out there. All right. Take care, and I'll see you guys next week.